All right, welcome back everyone for another episode of Wall Street Rounddown. I'm your co-host Billy. I got Wale with me. What's good, Wale?
What's good, everybody?
Man, I don't know, man. Today's like I feel like it's one of those classic cases of like bad news being good news because it's like when that job report came in, it was so weak, man. But the market didn't really like react much to it. Like we didn't see anything crazy. Like losing 23,000 jobs when we expecting like 80,000 jobs to be added. That's a big number, But they still even get more interesting in this, man. Because if you guys look at like the previous 2 months combined, they also got revised down by 69,000 jobs. June was cut by 23,000, and then May was cut by another 46,000. So we're losing jobs, y'all. We're losing jobs in big numbers, and those numbers that they keep reporting, it keeps getting revised over and over. I feel like every month we got a revision.
And I will say with this jobs report, the labor market is shrinking, and
Yep.
that's the only reason why unemployment didn't spike. So even though people are saying unemployment went down from 4.2 to 4.1, take that with a grain of salt. It's because the
Yeah.
labor
No,
market is
nobody's being
shrinking.
hired. Nobody's being hired.
No.
So you're not adding any jobs, and the people who are staying out of work are staying out of work. So it's like the labor market is getting smaller, so smaller. So I honestly think that this is not just about like one bad job report anymore. I think we're seeing like kind of like you say, like some cooling down on the surface, right? Over the several months, like we've seen like things was like just losing jobs. Like we have the whole AI taking jobs from people and all that stuff. So it's like companies are just not hiring. They're actually taking that money and investing into AI. So it's like they're not investing in employees anymore. So
Nope.
what did the market do? We rallied. I mean, if you guys look at like when the market opened, man, everything gapped up. Like I think S&P, Nasdaq was all up. Like Nasdaq was up like 1%. S&P was up like I think like 0.4%. Like things were up. Like I was like, what the heck is going on? Like I was shocked, honestly. I was like, are we not seeing the same numbers? Like, what is happening? So let's talk a little bit about that, man. Because I think for me, and then we have Michael Burry calling, top on in the stock market. I know we're gonna talk about that later, but it's like something is definitely off with the market as far as I know. We're not reacting to the numbers the way we react to like a year or two, 3 years ago.
Yeah, so when I'm looking at today's market action, I take things with I kind of call it a grain of salt because if you look at what happened today, there was not a lot of follow through in today's price action. We had that gap up after the jobs report, and then the
Mm.
market just traded sideways for the rest of the day. Like there wasn't really much follow through. So IWM I know um, was up 1%, QQQ was up over 1%, SPY was up about a little bit over 0.5%, but after that we really didn't
We didn't go
do
anywhere.
we didn't really go anywhere. So I take like I said, I take that with a grain of salt. Now, I've been saying this that everybody keeps saying that the consumer is strong, the consumer is strong. And I'm kind of like, you don't really you can't I don't think you can call the economy strong, in my opinion,
Right.
if you're losing jobs, right? Now, people might say, well, they're losing jobs because companies are being more efficient.
Mm.
Maybe that's the case, but at the end of the day, when you look at the GDP number, I think the GDP numbers that we recently got weren't even that good. You
Nope.
can see that growth is slowing down, and with GDP, I mean, with consumer spending being most of GDP, I think that that's one of the things that is faltering. I just heard today that one of the consumer motorist companies are saying that purchase of luxury vehicles has been declining and it's hit its
Yeah.
lowest point since 2020.
It's goddamn. You
So,
can buy a Toyota now for the same amount you buying a luxury vehicle like 2 years ago. Like, you know what I mean?
so
Even the economy vehicle expensive now. So it's like
yeah.
it don't make no
So
sense.
when I'm looking at certain things, when they talk about the consumer and the economy, the math is not mathing to me. It's really not
No,
mathing.
no.
Usually in a strong economy, you see job growth, and we just have not seen that. I mean, today was a big miss on the jobs report. Now, could it be that maybe now people are saying that, okay, well, since unemployment is not going up, then the Fed can focus on inflation. Maybe that's it. Maybe
Mm,
that's it. I don't know. But um, yeah, I was surprised with the market's reaction. But then when we kind of traded sideways, I was kind of like, okay, this is I'm not surprised with the follow with the non follow through after that. But
yeah, yeah,
um, yeah, we'll see, man. I am not in that camp of things are going well for the average consumer right now
yeah,
because it's
yeah,
just not. And I'll also keep saying this too. I really do think that the gig economy is hiding a lot of the damage that is happening in the job market. I really
yeah,
think so. I
yeah,
think so.
yeah.
So
Absolutely, absolutely. Let's move on to the some of the biggest earnings for this week, man. Palantir, NAT, and SanDisk. I mean, I think we're seeing how like those three different stock actually kind of like all play within the AI trade. Palantir is monetizing the intelligence layer, Cloudflare is monetizing the network and the infrastructure layer, and SanDisk, of course, we know, is monetizing the data and storage layer. So I think those numbers that we've seen from them was interesting to me. I think the only one that didn't probably go up was that is that NAT. No, everything went up. I think.
SanDisk was the one. SanDisk did not go up after earnings.
Yep, Sanders kind of dipped after earnings, but if you look at Palantir like absolute crazy monster, man. 10% move in one day. That's amazing. So let's talk about some of those earnings, man. What do you how are you feeling about them?
Yeah. So Planeteer is one of the stocks in the software sector that I've discussed, and I think when it was having a really really rough go, I think not too long ago, I posted on my page that is there an opportunity for Planeteer to get back to all-time highs? And the stock at its high was at what I think 207, and then
Mm-hmm.
its most recent low was around 106. So when I was looking at the chart, I was like, okay, this is a stock that's been pretty much cut in half.
Yeah,
And when you look at the stock from that point from 207 to 106, the question as an investor you should look at is, has there been any damage in the business? And when you do the fundamental analysis, the answer to that is no.
yeah,
That Planeteer was still growing its business at a pretty remarkable clip over the last couple of months, despite the stock being down over $100 since when was that? November. So I think around like 125, I reached out to people in my investment group and I was like, yeah, if anything below 125, in my opinion, on Planeteer is an attractive price to maybe start accumulating some
mm-hmm.
shares because the business continues to grow tremendously. And we saw that move after earnings. It was up almost 30% in one day. So you talk about the close from before it reported. Let me go to that number. Planeteer was at what did it close at? 125.65. Now it's trading at 172.01.
Crazy move.
So I'm pretty sure there was people who were short and there was some short cover in there. So they had to
Yep,
go in there and start buying the stock back. But
yep.
yeah, Planeteer to me, if they continue to grow at the clip that they're moving, the business continues to show robust revenue. I think that this stock could possibly get back to all-time highs for investors that are patient. SanDisk, SanDisk was down. Um, Nothing wrong with the business. This is another
Right.
stock. This is another stock where when you look at where it was at its high at 2,354, now it's trading at 1,200 bucks a share. The stock has dropped, but this is a stock that has just had a nasty, ridiculous run to the upside.
Crazy.
And we keep hearing that there is going to still be a memory shortage going on to 2027. So to me, SanDisk is one of those names where I would put them in the category of good company, bad stock performance right now.
Mm.
The business is still good. The earnings are still good. The revenue's still good. They have a pretty, I mean, Micron, SanDisk. Who else is in there? Who else is in one of the memory companies? WDC.
WGC. Yep.
Um, I said Samsung. SK Hynix. All the memory and the storage companies. They they are still doing really really good from a business standpoint. So as an investor, this is probably a name that has come down tremendously. I'm not saying rush in to buy it now, but this is probably a stock I would be interested in after this pullback, just because of where they sit in the AI infrastructure
Yep.
place. And again, great business. And then lastly, Cloudflare. So Cloudflare is a name that I've talked about in the last couple earnings that Cloudflare has had. Let me go back to the chart. Yeah, I think Cloudflare just hit an all-time high again, if I'm not mistaken. Yeah, Cloudflare hit an all-time high of 324.73 this week. Earnings looked really, really good. Now I did pull back from the highs from today's open, but yeah, they are one of the software cybersecurity companies that has done a very good job of monetizing what AI is going to need, and they just continue to grow. And it's the last two earnings reports. If you look at where this stock traded back in May, this was $190 stock. Now it's sitting at 300. You know, not a bad move over a short period of time.
Not at
So
all. Not at
yeah,
all.
I would put them when I always talk about cybersecurity and I look at the names in that realm that are kind of sitting at the core part of the business, I always put Palo Alto Networks one. CrowdStrike is like 1B, and I would put Cloudflare up there in like the number two, number three slot,
Yep.
because if you look at what they do and the things that are needed for AI and data protection, they sit in the middle of all that. So I put them in a very mission critical spot when it comes to AI.
Yep, yep, and I completely agree. The other thing with Sanders too, they have a maybe some type of bullish catalyst coming up. They have Investors Day scheduled for August 13th. So
Mm,
again, people will be listening closely to see where the management is taking the company in the next year or two or even 5 years and see what's actually what's driving the demand for the AI and stuff. So again, I think it's a good company. It's the service or the product that they provide is absolutely needed right now. So in terms of fundamental, whatever they're doing right now is needed in order to drive this AI forward. But other than that, I think we are witnessing a good company that's probably, we're probably gonna see it go back to the all-time high again. I don't know when it's gonna happen, but it's still a good company in my opinion. Let's talk about a little bit about how Bank of America is seeing that there's three rate hikes maybe baked in for was it for this year? Are they saying for this year? I don't think so. I think they just say in general.
I think, yeah, in general. Yeah.
But my question is, we just lost like 23,000 jobs. Like, how does that impact their predictions now? You know what I mean? So is that I mean, is it happening? Is it not? Because it's like kind of what you just said. Like maybe now the Fed is going to take their eye off the rates a little bit and start focusing maybe on inflation and stuff. So I don't know. I don't know if this prediction is still valid, but we shall see. What do you think?
Yeah, so when I look at a lot of the big banks over the last couple of years, I mean, let's be honest, a lot of them have been wrong when it comes to trying to predict what's going to happen with interest rates, right? Remember a couple months ago, we were like, oh, we're going to get what, three cuts? Nope. And now everybody's saying, okay, we're going to need three hikes. I think there is one Fed member, Neil Kashkari, who says he is in favor of raising rates.
Mm,
And if you look at the way inflation has moved and where the Fed funds rate is, there's if your objective is we're going to get inflation back down to our 2% target. I mean, Kevin Warsh has said that with like his chest out and he's been proud of that, and yet they have not moved
I
rates.
haven't done it.
There's no way that you can get to your 2% target without raising rates. And they're talking about 75 basis points. So they're talking about 3/4% hikes. I mean, if I'm the Fed, I might come out and just I might just come out and just do 50 or 75 out the gate.
Same time, yeah.
Just get it over with. Just get it over with.
Oof.
But I really do fear, or I think that they fear that will hurt the stock market. And I think no one really wants that on their reputation, even though to me, it's the right thing to do if that is your goal. Like it's
Yeah,
just not going to happen on its own.
yeah,
And I think the long end of the of bonds is showing that inflation expectations are remaining elevated. I mean, the bond market is basically saying I am expecting higher inflation for longer, and it continues to creep higher. I mean, when you talk about a 30-year bond at 19-year highs that we have not seen, to me, that's a red flag. And the Fed continues to not take action. And I kind of understand what they're saying, quote unquote, and what they think. But at the same time, I'm like, if this is your mandate and this is what you want to solve, you have to take action. And to me, delaying it is only going to get worse. But I do feel that there's a lot of uncertainty with the war, and no one
Mm-hmm.
knows how that's going to end. So maybe that's one of the things they want more clarity on before they start, making decisions.
Yeah, yeah. But we'll see, man. I mean, like he mentioned, actually Trump was talking about this also today. That he's like the decision to raise rates or decisions on any rates decision basically shouldn't just fall on Kevin Warsh his
Mm.
shoulders alone. And I was like, is he hinting at something? Is he like maybe trying to like shift the blame a little bit away from Kevin? Because it's like it's a completely different tone than when he was talking about Jerome back in the day. You know what I mean? So again, maybe Kevin is telling him, I want to raise the rates. I want to lower rates. I want to lower rates, but the people not letting me. Maybe he's trying to put a little bit of a little bit of um pre decision in there because he likes to play games sometimes. So he might
we
just
got
say like
We got a question in the chat. Somebody said, "What do you guys think of Oklo's earnings today?" So I didn't get a chance to listen to Oklo's earnings, so I don't have any comment. But it is one of the things that is on my to-do list this weekend is to kind of get a summary of what they talked about.
yep.
But I looked at the stock reaction. I think the stock was up today, if I'm not
Mm-hmm.
mistaken. Yeah, the stock was up 14%. So I would assume that the timeline that they have is still intact, but I don't have any details about um, what they talked about on that call, so I don't have any comment. But I'm assuming whatever they talked about was good because of the stock reaction. But I'll give my comments once I get a chance to listen to the earnings call.
One of the biggest thing about Aklo, like I would say, like don't focus too much on necessarily the numbers, but focus on like how fast are they still on track to
Correct.
commercialization, right? Like are
Yes.
they still on track
Yes.
to deliver what they say they're going to deliver?
Correct.
Because
Yep.
the numbers right now, I'm telling you, if you look at it, you're probably going to be like, I'm not investing in this company. I'm just being honest with you
Yeah.
guys. But as
Yeah.
long as they say we're still on track to deliver on our promise, I
Mm.
think we're okay. The moment
Yeah.
they say we're running into issues and stuff, then you can
Correct.
start hitting the panic button.
Yeah.
But yeah,
If you're an Oklo investor, you're not looking at like there's no revenue and there's no earnings.
right.
But as Billy said, the timeline to deliver their first commercial product to start generating revenue, partnerships, legal hurdles, those are the things that you want to listen to on the call.
Yep.
As long as the runway remains intact, because they've been talking about this for the last couple of years, to me, as an investor, I stay on board. You know, they're on I would say it sounds like they're still on track to deliver on what they said they were going to deliver on.
Yep. Yep.
And the moment that narrative changes, if they pull what do you call it? Oh man, what's the name of that one company where the truck was
Oh, the
fake?
trucking thing. Dang. It starts with an N, I think. Dang it. I know
Nikola.
exactly. Nicola. Yes.
Yeah. They pull some stuff like that, then yeah, I'm bailing out. So
Yeah.
I
Yeah.
gotta
Yeah.
listen to the earnings call, make sure the timeline remains intact, and then that'll help me sleep at night. But again,
Yeah.
as a pre-revenue company, you're not gonna the numbers aren't gonna be the thing that you should definitely focus on. But that's a good question. So I'll have
Yeah.
an answer hopefully when I listen to it this weekend.
Yeah. But again, at the same time, like I keep telling people, like for this whole energy thing, like we're still early into it anyway. I think we started talking about it a lot earlier, but when it comes to energy and the need for that energy, I think we're still kind of early into it. So we'll see what happens
Hmm.
in the next few years. And when this is actually needed. Kind of the same thing with when we haven't really talked a lot about memory. The next thing we see SanDisk running like we see all these crazy companies running out of nowhere because that is this next stage that's needed now to be able to advance AI development and all that stuff. So we shall see
Yeah.
when the energy is gonna come into play here. So
Because I think that to me, when I think of the whole AI infrastructure build out, nuclear solves the problem that a lot of people keep hammering about. Oh, you're using too much water. Oh, you're putting too much stress on the grid. Like all of those things nuclear solves. The question is how soon can they deploy
how
that
soon?
and how much energy can be provided to supply what people need. So that's
Right,
what we're waiting on. And
right.
hopefully they can, get things rolling in a reasonable amount of time. Because I think 2027 was when they said they're trying to go with their first commercial product. So that's coming up next year.
It's
We're
coming up next year.
we're
Yeah.
already in August of 2026. So
Yep. 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 So that'll be something you guys keep an eye on over the next few months here. So
yeah.
let's move on to Michael Burry, man. Listen, everybody was celebrating new highs this week. Like if you guys look at S&P hit a new high, all of those other, just hit a new high. Michael Burry is like, nope, I think we're done. We just reached the top. If you guys don't know who Michael Burry is, go watch the biggest what's the biggest short? What's that movie called?
Oh, oh, the Big Short.
The Big Short. Go watch The Big Short. You would know all about him. So, anyways, but overall, um the narrative that he's painting is that we're in a bubble, and this resembles a lot of the bubbles that he's seen in the past. So let's talk a little bit about that, man. Because he's been calling tops for like the past 2 years, I think. I don't know. On Instagram, he deactivated his account, shows up again. It's like I can keep up with this guy.
So I will say this. If you're an investor and you're in the calling tops and bottoms business, dangerous
Mm-hmm.
business. It's a dangerous business to be in because a lot of times people are wrong. Now,
Mm-hmm.
they say that a broken clock is correct at least twice a day. So sometimes
Yep.
people get lucky and they get it right. But the thing and I'm not saying that he's right or I'm not saying that he's wrong, but this is something he's been talking about for a long, long, long time. Markets continue to push higher. Now, this is what I have in my notes. He says that he is expecting a 1987 style correction because as markets make new highs, volatility remains low, and that is dangerous because it causes complacency. So he's not saying that there's any problem with corporate earnings. He's not arguing that because corporate
Mm-hmm.
earnings have been really good. Corporate earnings have been the main driver of what's driving stocks higher. He says market structure, and he's particularly talking about volatility targeting and algorithmic funds could amplify selling once momentum reverses. So he's still skeptical about the AI trade. He remains short with a couple names. I think Nvidia he's short. I think he's short on Oracle. And what he's saying is that, at some point, the market is going to have to give way because what's kind of supporting the market. He doesn't necessarily believe in a lot of the off balance sheet commitments that some of these companies have. And he's
Mm-hmm.
saying that that will hurt stocks in the long run. We saw a correction in July, right? Because we saw a lot of the AI stocks got absolutely crushed. SanDisk was off its highs, Micron's off its highs. A lot of these names were, off of their highs. But I just feel that as you have these new advancements in technology over time, to me, I think there will be growing pains. Like there will be times where you have to sift the winners and the losers. And I think that that happens over time. So have some of these stocks ran too far too fast? Absolutely. SanDisk is a name that I will say has run too far too fast. Does it mean that we're in a bubble? I would say not necessarily. So I always say this, the speed at which stocks go up, you know, is very similar to the speed at which stocks can come down. And
Mm-hmm.
when valuations matter, like higher interest rates, you know, that matters to stocks, you know. And at some point, let's just say we get to a point 5 or 6 years from now where interest rates may come down. That adds value to stocks. So the thing that you should be looking at is yes, corporate earnings are good, stick to quality companies that are going to continue to produce these robust numbers regardless of the headlines. And to me, the companies that sit in the essential pieces that will continue to be needed are the ones that you want to be a part of.
To be a part
That
of it. Yep.
that to me is how I would be analyzing the AI trade.
Mhm.
The cloud is something that's not going away. As long as you have AI, the cloud is going to be needed. To me, that's the place where, as an investor, I want to be a part of that. I want to be part of quality cloud companies. Another place to also be in is energy. Energy is also going to be needed, and more of it is going to be needed in the future. That's another place that I would want to be a part of. So don't think about the AI trade on a year to year basis. You have to think like long term about where things could be headed. We saw the same thing with the internet. Everybody's like, oh, all this fiber optic cable, they overbuilt, they overdid this, they overdid that. Look what the internet has turned into.
Right.
So you can't be short sighted, in my opinion. Will there be growing pains? Will there be volatility? Absolutely. But I think that that's what's necessary to sort of sift the winners from the losers.
Yep.
That's how I feel about what's kind of going on. So we'll see what happens. I've been looking at bond spreads, and I still think that they're elevated, so I'm a little bit cautious. But if you're talking about a 1987 type of like crash, something needs to be systemically wrong in the system.
Right. Right.
And I keep talking about it, private credit could be a driver of that. Stuff like that, you know, but that has nothing to do with AI, in my opinion.
Right. 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 I don't know, man. I still haven't seen the consumer participating in this drawdown on the market. Like I feel like they keep saying consumers so strong, consumers so strong. It's like we haven't really seen the impact of people using credit cards and people living beyond their means to be able to kind of like support themselves and all that. So we haven't seen that yet. So if that hits the market, I mean, can you imagine like millions and millions of people just like not paying their bills or not paying their credit card bills? That's gonna put a lot of pressure on the market. You know what I mean?
Correct.
So we'll see. We'll see. I mean, like you say, he might be right, he might be wrong. We don't know yet. So we just keep an eye on it. So
Yeah.
yeah.
Like I said, I don't, you always see some of these commercials where people are like, oh, this guy called the top or this guy called the bottom. Like, oh,
He just got lucky.
most of that stuff is BS. Like
They got lucky.
no one can accurately call tops or bottoms. Now, um, I again, when you talk about the type of crash that he's talking about, it's not it's systemic risk. Back in the .com era, the systemic risk was companies with no revenue,
Yep.
like fake companies. In the housing market, it was people getting mortgages and overextending themselves on loans
On the
for
shouldn't be.
mortgages they didn't need it.
Yeah.
So this whole AI thing that he's talking about, a lot of these companies have real revenue, they have real product, there's real demand. So I don't know if I can pinpoint to that as a driver of systemic risk. I just can't at this point. Now, could there be other factors? Again, you mentioned the consumer. The consumer could be, if the consumer just crumbles and everything kind of just hits the fan all at once, oh yeah, that can be bad. If private credit crumbles or commercial real estate crumbles because of interest rates, that can
That
be
could be
bad.
bad.
So
Yep.
those are the things I would be looking at. I wouldn't be looking at AI,
Yep.
at
I
least for
agree.
the quality companies, in my opinion.
Yep.
Let me put that caveat out there.
Absolutely.
Yeah.
Absolutely.
So
Well, looking ahead to next week, man, I think Wednesday is the day I'm circling back because it's when we get the. CPI report, and normally CPI is important, but after today's job reports, I mean, this one carries even more weight because we clearly showing like signs of weakness, but inflation remains a Fed problem. So if CPI comes in hot, I mean, that's going to make the Feds very, very uncomfortable. Slowing employment and persistent inflation, it can cause a lot of issues. So what's your opinion on the CPI? What do you think how the market is going to react to it?
yeah, I will say energy prices will probably play a good factor in that. I'm
Mhm.
also starting to hear, this is what I don't understand, and I need to do my own research on this. Okay,
Mm.
so the government had to issue tariff refunds
Yep.
for certain companies. But now we're hearing that new tariffs are coming.
Yep. Makes no sense.
I don't know how that's
Because the Supreme Court just ruled that it was illegal. I don't get it.
so I don't understand what method the president is using to implement new tariffs. I don't know what loophole he used or
Yeah,
circumvented. I
that
don't
there
know.
has to be a loophole.
I got to do my own research, but I'm shocked to hear that okay, we sent refunds out. We shouldn't have done this, but we're going to do it
We're gonna
again.
do it again. Somebody's making money off of that. I'm gonna
uh,
tell you right
so
now.
I have no idea how that's possible. And again, the more uncertainty you put on the plate of the Fed, the harder it's going to be for them to make a decision.
Yep.
And I think as long as that is the landscape that they got to deal with, to be honest with you, I don't think anybody knows what's going to happen with rates.
Yep.
I just don't think so.
I agree. I agree. But again, man, we'll keep an eye on the other date that I'm looking for next week is Thursday. We get the jobless claim and PPI. Also, we have
Hmm.
the retail sales and consumer sentiments on Friday. So we have a lot of consumer based reporting next week. We keep an eye on see how those goes. But overall, man, I think this wraps up our show for today. Do you have any other last minute advice you want to give the people for next week?
The only thing I will say was I saw a funny phenomenon this week was when we hit the all-time highs on SPY, the VIX was also moving
The
higher.
VIG was higher. That was crazy.
That didn't make no sense to me. So then I looked at today and the VIX actually dropped below 15 for the first time since, let me go back to my chart. Yeah, this is the first time we've been below 15 since like since like late December. Yeah, late December, early January. So is volatility exiting the market? Maybe. We'll see. But I'm not holding my breath at this point. So
Yep.
yeah.
Yep. Well, all right, y'all. That's a wrap for today's Wall Street rundown. As you guys can see, stocks are hitting all-time high. The labor market is showing some cracks. Earnings are still delivering, and the debate whether the Fed is going to raise the rates or not is still going. So next week, inflation is going to take center stage with all these different reports that we're going to have. So make sure you guys keep an eye on those numbers. It's going to be very, very important. With that being said, man, you guys enjoy your weekend. Stay disciplined as always. Follow the money, not the noise. We'll catch you guys on the next one.